Hello, everyone, and welcome back to Financial Podcast. I'm your host, Olivia, and today we're diving into the fascinating and rapidly evolving European car market, looking specifically at the trends we saw emerge in April of 2025. Recent data reveals some truly significant shifts, painting a complex picture of growth, competition, and challenges for established players. Overall, the market across Europe remained relatively stable last month. We saw a total of just over 1 million new passenger cars registered, which was only slightly more than the number registered in April of the previous year. Looking at the year-to-date figures, from January through April, registrations were also quite consistent compared to the same period in 2024. This suggests a steady, albeit not dramatically expanding market landscape overall. However, beneath this surface stability, there's a major transformation happening, particularly within the electrified vehicle segment. Battery electric vehicles, or BEVs, and plug-in hybrid electric vehicles, PHEVs, together reached a new record in April, accounting for a combined 26% of new car registrations. This is a significant jump compared to the previous year. Breaking that down further, BEVs alone represented 17% of the market in April, up from 13.4% in April 2024. PHEVs also saw strong growth, making up 9% of monthly registrations, an increase from 6.9% in the corresponding month last year. This robust performance from electrified vehicles stands in contrast to the notable declines observed in internal combustion engine, or ICE, vehicle registrations. According to industry analysts, while the electric vehicle segment was a clear bright spot, its gains were tempered by those declines in gasoline and diesel cars. For electric vehicle sales to truly have a substantial impact on the broader European car market, they need to continue growing at an even faster pace than we are currently seeing. Within the BEV segment, one of the most headline-grabbing developments in April was Chinese automaker BYD surpassing Tesla in terms of registrations in Europe for the first time ever. This isn't just a minor change. It's been described as a watershed moment for the European car market, especially considering that Tesla has held a leading position in the European BEV market for several years, while BYD only officially started expanding beyond Norway and the Netherlands relatively recently, in late 2022. BYD's performance in April was quite remarkable. Their registrations increased at a staggering 359% year-on-year. This rapid growth is attributed in part to their broad and competitive product lineup, which includes both fully electric vehicles and plug-in hybrids. This expansion has been so swift that BYD has already overtaken some established European car brands in terms of sales in certain key markets within the UK, France, Italy, and Spain. And this growth is happening even before production starts at their new manufacturing plant in Hungary. Contrastingly, Tesla experienced another difficult month in Europe, reporting a significant drop in volumes. Across Europe, including the UK, Iceland, Liechtenstein, Norway, and Switzerland, Tesla's sales tumbled by 49% in April compared to the previous year. Looking specifically at the European Union countries, the decline was even steeper, plunging by approximately 53% year-over-year for new car registrations. This marks the fourth consecutive month that Tesla has seen declining sales in the European Union. The sales performance for the first 4 months of 2025 also shows a considerable decrease, down nearly 40% compared to the same period in the previous year across Europe, and around 46% specifically in the EU. This downturn has caused Tesla's market share for new car registrations in the EU to drop significantly, falling to 0.6% in April from 1.3% a year earlier. Several factors are contributing to Tesla's struggles in the region. Intense competition is a major one, coming from both traditional European automakers and increasingly from Chinese firms. Brands from China like BYD and SAIC are aggressively launching tech-rich electric vehicles, often at very competitive price points, which is eroding Tesla's historical price advantage.
Another significant factor cited is the perceived backlash against Tesla's CEO, Elon Musk, due to his political views and controversial actions. Some reports suggest that this has led to protests and boycotts, negatively impacting the Tesla brand image among European consumers. While Musk has indicated plans to focus more on company management and less on certain political activities, the impact of his public persona seems to be a real challenge for the brand in Europe. Beyond the competition and brand image issues, Tesla's current product lineup is also noted as aging. Their key models, the Model 3 and Model Y, have only received minor updates, and the company hasn't introduced new mass market models recently. Meanwhile, competitors are releasing fresh vehicles with advanced features, new styling, and improved comfort, offering European buyers more variety and newer options. Even the upgraded Model Y, which was introduced this year, doesn't seem to be significantly boosting sales figures in Europe. Additionally, Tesla had to shut down factories for several weeks earlier this year to implement upgrades for the Model Y, which also impacted supply and could have contributed to the sales dip. Furthermore, Tesla currently only offers fully battery-powered cars. This puts them at a disadvantage in segments like plug-in hybrids, which are experiencing substantial growth in Europe and are increasingly favored by consumers, accounting for a significant portion of the electrified vehicle market. European consumers are increasingly showing a preference for hybrid options, a space Tesla doesn't currently compete in. Chinese automakers have been particularly agile in navigating the European market, especially in response to trade dynamics. Tariffs imposed by the European Union on electric vehicles made in China earlier this year initially had a negative impact on the sales of some Chinese automakers. However, many have responded strategically by expanding and diversifying their European lineups to include plug-in hybrids, which haven't yet been targeted by EU tariffs. China is recognized not only as a world leader in BEVs, but also in plug-in hybrid vehicles. By focusing on PHEVs, Chinese carmakers are looking for alternative ways to gain traction and maintain the momentum of their global expansion plans in Europe, effectively employing a Plan B in response to the tariff threat on BEVs. The success of this strategy is evident in the data. Registrations of electric cars made by Chinese automakers rose by 59% year-on-year in April. But the growth in the PHEV segment from Chinese players has been even more dramatic, increasing by an astonishing 546% year-on-year, from just under 1,500 units in April 2024 to over 9,600 units in April 2025. Chinese car brands now represent almost 10% of the total number of PHEVs registered in Europe. The question now is whether the EU might respond to this surge in Chinese-made PHEVs by imposing tariffs on these vehicles as well. Beyond the Tesla BYD narrative, there were other notable performers in the European market in April. The Renault Clio, a French subcompact model, led the overall model rankings for the first time since June 2020. This marks a shift, as it had lost ground in recent years to its rival, the Dacia Sandero, which was Europe's best seller in 2024. Another strong performer was the Volkswagen Tiguan, which saw its registrations increase significantly, rising by 32% in April compared to the previous year. Other models showing positive momentum included the Toyota Yaris Cross, the Dacia Duster, the Opel Vauxhall Corsa, the Peugeot 3000, the Jeep Avenger, and the Mini Cooper. In the BEV model ranking specifically, the Skoda Elroq took the top spot for the first time. This outcome is seen as a vindication of Skoda's decision to introduce an SUV model positioned between the B and C segments. Several Volkswagen models also performed well in the BEV rankings, with the Volkswagen ID.7 showing particularly strong growth, increasing its volumes by 640% to reach third position. The new Renault 5 also made it into the top 10 most registered electric vehicles in Europe last month, as did Kia's recently launched EV3. Conversely, some popular BEV models besides the Tesla Model Y also saw declines in April. For instance, volumes of the Volvo X30 dropped by 57% year-on-year. This highlights that while the overall BEV market is growing, the competitive landscape is shifting, and specific models and brands are experiencing varying degrees of success and challenge.
The broader market context also involves the role of tariffs and trade tensions. While recent reports indicated a delay in a threatened 50% tariff on EU goods by the US president until July, the potential for such measures adds another layer of uncertainty to the automotive industry's outlook. The trade war has, in some ways, already influenced European consumer sentiment towards American brands. In summary, April 2025 proved to be a pivotal month in the European car market. While overall registrations remained stable, the underlying dynamics are changing rapidly. The surge in electrified vehicles, particularly BEVs and PHEVs, is a major trend, driven significantly by the expansion of Chinese automakers. BYD's ascendancy to outsell Tesla in BEVs for the first time marks a significant milestone in this competitive shift. Meanwhile, Tesla faces considerable headwinds, including intense competition, brand challenges linked to its CEO, an aging model lineup, and production interruptions, resulting in a substantial decline in its European sales figures over the past 4 months. The strategic pivot from Chinese brands towards plug-in hybrids, influenced by the tariff environment on BEVs, demonstrates their adaptability and commitment to gaining market share in Europe. As the market continues to evolve, with new models launching and competitive pressures mounting, it will be crucial to observe how different automakers, both established and new entrants, navigate this dynamic landscape and adapt their strategies to succeed in the European market. Thank you for tuning in to Financial Podcast. I hope this overview of the recent trends in the European car market, drawing on the latest data from April 2025, has been insightful for you. We'll continue to track these developments closely on future episodes. Until next time, take care and see you then.